With Nigeria's economy projected to grow by 2.5% in 2022, as predicted by the World Bank based on expected recovery in crude oil prices and production, Nigeria will see economic activities normalizing in the new year. Despite its continued dependence on oil, the economic outlook for the country is expected to be steady, going by the marginal growth recorded in the past year, as the services sector of the country's economy will continue to outpace the rail sector in 2022. However, the 2022 being a pre-election year will probably not be significantly different from the past year, as widespread poverty, high unemployment, and falling consumer purchasing power are expected to persist if key macro fundamental issues are not addressed. Well, I introduced him earlier so that we'll look at the economic outlook for 2022. He's joining us virtually as a fiscal policy partner and Africa tax leader, PricewaterhouseCoopers, Mr. Taiwo Oyedele. Good afternoon, sir. It's good to see you.
Good afternoon, Tolu. It's good to see you too.
It's 2022, yes, of course, and a lot of projections and reprojections considering Omicron, some global issues, and all that we've seen at the moment. But give us an overview. What are you thinking of? What's your projection? 2.5%, 3%? What are you thinking about 2022 before we go into some specifics of what should drive growth in the year?
Yeah, thank you. I wish I can answer that question with 100% certainty. I'll be the richest man in the world. But I think, essentially, we have to start by looking back to say, where we are today, particularly with focus on 2021, what were the main issues and the key drivers of the outturn at the end of the year. So, of course, a key component is COVID-19 with all the various variants, and then the impact of that on the global economy, including the price of crude oil. But I think that last year, turned out eventually to not be as bad as many people had expected. So the average crude oil per barrel for 2021 ended at about $70, which was far more than we budgeted at about $40, but unfortunately our volumes were very low. Average volume was around 1.4 million compared to almost 1.9 million, 1.86 million barrels per day that we had budgeted. So that didn't help. So eventually we struggled, even though there was growth in reserve numbers. It was essentially due to borrowing, because we had a lot of borrowings, including Eurobond and a few multilateral and bilateral loans. Naira devalued as a result, and the GDP growth rate was not really fantastic, but maybe it could have been worse. So if you think about all of that, you now say what's going to be different in 2022? Maybe a lot of uncertainty. So COVID being the biggest one, how COVID plays out in 2022 will be a major determinant of what happens to the Nigerian economy, even though we have been fortunate in terms of, we don't have a lot of infections and we don't have many people dying as a result of COVID. But economically speaking, we've not been as lucky because whatever happens to the rest of the world affects our economy very significantly. So I also think that, pre-election, like everybody has said, is going to play a major role because Nigerians just love politics for some strange reasons. So for us, even though the elections are next year, we have started politicking already, and our politicians don't seem like they're very skillful in multitasking. They tend to do one thing at a time. And when it comes to matters of politics, for them, it takes priority over everything else.
And I'm also worried that we have, looking back, all of the initiatives for recovery, some of the initiatives introduced by government to improve exports, to ease small businesses, and all of that, all around the COVID time, and all of those moves. Would you say that we got a lot of positives from this? What would you say, how positive has all of these interventions been if we are to look at some of them? Because that would also determine the level of growth if we are doing very well with the interventions being made by both the fiscal and the monetary side.
Yeah, the interventions, maybe without them, things could have been worse. But I also think that in terms of our economic philosophy as a country, it begs, for a lot of interrogation. We tend to think that we can solve problems by throwing money at them. The reality is that in most cases you cannot, because what most of those problems are looking for, they're not looking for money. They're looking for policies that are friendly. They're looking for consistency. They're looking for enabling environment. They're looking for removal of impediments. They're looking for simplification. They're looking for reducing overregulation. So those things, in my view, could have made more impact than, because we actually don't have the money. So CBN does not have money. Federal government does not have money. The state governments are broke. So at the end of the day, how much intervention can you actually provide? So all the palliatives and intervention we provided is barely up to 2 or 3% of our GDP. Even smaller economies like South Africa were doing double digits. Of course, the larger economies did a lot more. We did not have that fiscal space to do a lot. But I think we've missed the opportunity to introduce a lot of policies and to make tough decisions. Tough decisions like, what did we do with petrol subsidy is now becoming a bigger problem, and we could have dealt with it at the height of the pandemic. Decisions that we could have made about assets and so many things that we should have privatized. So I think that even though I would commend the central bank and federal government for what they did, but I think that we missed the opportunity of using the crisis as an opportunity to address some of the more structural and significant issues to do with the economy. So overall, it could have been worse, but also we missed the opportunity to make it a lot better than we ended up eventually.
All right, many will say that we need to plan well so that we don't fail. And as a country, we're planning, we have a budget. And that's part of the plan for us to be able to run the economy in 2022, right, Mr. Udili? So I'm looking at a budget of a deficit of about 6.25 trillion naira. That's about 3.39% of our GDP. What are you thinking? This is worrisome. It will definitely affect some of our projections. I'm also looking at the assumptions. Crude oil price, well, doing fairly well. Our production quota is down at the moment. Our exchange rate, neither here nor there. We still have issues with that. And GDP growth rates. What do you make of all of this?
Yeah, no, the budget is in deficit finance, and that's understandable because you're not going to move the needle on revenue generation overnight. So I'm not so worried about the 2022 budget itself in terms of the size of the budget. By the way, the size of our budget is still one of the smallest in the world as a percentage of GDP. I think we're only just doing better than a few countries like Haiti, Venezuela, Sudan, and a few other places. We're in the bottom 10 of all the countries in the world. So the size of the budget itself is not a concern for me. The fact that we have a huge deficit in that budget will be a little concern for me, but not only about the 2022 itself, but the trend that I have seen. And if we don't do anything, it's going to become a problem in the medium to long term. What is even more important beyond the amount we're able to budget? Government has to realize that we do not have the money. We're not going to have the money anytime soon in the public sector to be able to finance development for Nigeria, to be able to fund growth. We would need the private sector. And that's very clear in the National Development Plan that was approved towards the end of last year. That government is expecting a lot from the private sector. But then we don't seem to have consistent policies to support this aspiration that we have for the private sector rather. In terms of credit to the private sector as a ratio of the credit to the public sector, I think it was ratio 1:3, thereabout last year, with the public sector at about maybe 13 trillion and the private sector around 40 trillion. So if you look at the expectation in the National Development Plan, government is expecting about 300 trillion from the private sector, And both federal and state governments are looking at about 50 trillion. So that's easily about a ratio 1 to 6. Bear in mind that even governments, in addition to the credits that they will get, they have powers to raise tax revenue, and private sectors don't. So if you look at that ratio, it suggests to us that we need to do a lot more for the private sector to be able to finance growth, to be able to create employment, and to be able to ensure that we have inclusive development. So some of the policies we have seen in the Finance Act, some of the expired incentives in the capital market, like taxation of bonds, corporate bonds in particular, taxation of capital gains, they seem to be suggesting the opposite. So it's actually the time that we need to, again, we cannot have growth without investment. We need all the investments that we can muzzle, whether it's foreign investment, whether it's domestic investment, whether it's large businesses, whether it's small businesses or micro, all the investment we can get. This is the time to attract them. Without significant investment, it's almost impossible. It will just be a dream or a nightmare, just hoping that we can grow and grow in an inclusive manner. At the end of the day, if you look at the numbers for last year, whether it's foreign direct investments, whether it's foreign portfolio investments, whether it is diaspora remittances, all of those were down significantly, and they're not going up as of yet. So what the issues are, in my view, is that number one, we need to address the policy environment. And those policies have to be those that are investment friendly. And number two, we need to de-risk Nigeria. So the risk in Nigeria is too high because investors would always look for, what I call risk-adjusted returns. So the fact that you offer double digits does not mean that they will come if they think that the risk is not commensurate. That's why with the normalization we're seeing by the Fed in the US, money is already moving to the US. But what are we talking about? We're talking about adjustment that is less than 1%. Yes, people are moving there. And that's very low rate because for them, they consider it to be a much lower risk for them to take than coming to Nigeria. If you think about the fact that the exchange rate today has not been unified, it means that if you bring money today to invest in Nigeria, let's say $1 million, you face two risks. One is that you convert the money into Naira, you invest in Naira assets, and you don't know where Naira is going in terms of the exchange rate of Naira to the USD. Second issue that you face, which is a big risk, is that even when you want to exit, you may not be able to get your money out. When you make returns on investment, you may not be able to repatriate it. Those combined risks are big enough to discourage investment, whether it's especially from foreign sources. These are the things we need to focus on and address in 2022 to be able to make a big difference.
All right, now on a final note, but it's going to be a two-in-one question. First is, like you said, Nigerians love politics, and people are saying that there will be a lot of spending ahead of 2023. What effect do you think this would have? Is it going to improve liquidity in the system? What positives will this have? Then on the other side, what's your take about revenue mobilization initiatives being undertaken by government? Do you think they are on the right track?
I think, on the spending, so we all expect that there will be spending because of pre-election year that we are in. It will have both positives and negatives. So the positive aspect will be that, some of this spending, even though it's not printed, it's money under the table. It's just politicians buying votes. And what that tends to do is it puts some money in the hands of the people. And because many of them are very poor, when they get money, they don't save, they spend. So you're going to see more spending, which is good for GDP growth. But the risk is that in itself can fuel inflation, such that you can have higher inflation in the economy. The other risk is that many of these, pre-election spending that it's not official, people have to, in a way, they look for dollars to buy. And that would increase the pressure on the demand side for dollar, and it could also then escalate the devaluation of the Naira. But hopefully, we get more of the positive side than the negative. On the revenue mobilization initiatives of government, I think some progress have been made, particularly if you think about the MDAs, where government, I think for the first time in a long time, if not highest in our history, they've been able to generate over ₦1 trillion from revenue from MDAs, and I think there's a lot more that we can generate from that. Some of the increases in tax rate, like education tax and imposition of excise duty, on things like carbonated drink, I do think that the timing is premature. I think we should allow the economy to recover. And I think that overall, we need to start making tough decisions. One of it is we have to stop the bleeding. I do think that the first subsidy regime is one of the biggest way we're losing money. And it's a country that is really poor. And then you have to find a way to use technology to capture data and intelligence to ensure that people with the ability to pay their fair share. I don't see any reason why government should not even think of increasing the exemption threshold for people who earn very little. Currently, it's about 30,000 per month. I think it should go to at least 50 to 60,000, and then you should increase the tax rate for people who earn a lot more. Maybe if you earn anything like 20 million naira per annum or more, your tax rate should go up. So you go to South Africa, you see people pay as high as 35, 40%. But in Nigeria, even if you earn 100 million naira per month, you don't even get to 20% effective tax rate. We need to start thinking about how do you get people with the ability to pay a little bit more, so we can take care of the rest of the society, and more importantly, for government to be very efficient in how these revenues are utilized, so that we can get the best from every naira we spend, given that we are indeed a poor country.
All right, in one word before I let you go. So are we looking at that same marginal growth, or what kind of growth do we now expect in its entirety in 2022?
Yeah, it's difficult. I'll say everything considered. If COVID does not misbehave, and therefore the price of oil is stable and at the region of 70 to 80, I would say that we should be expecting growth in the region of 4%, maybe something slightly higher than our population growth rate, so that we don't push more people into poverty, which was the case in 2021.
All right, well, it's a good way to leave it. Thank you so much for your time. I've been speaking to fiscal partner and Africa tax leader at PricewaterhouseCoopers, Mr. Taiwo Oyedele. Thank you so much for your time, and do enjoy your weekend.
Thank you for having me.